Well, we're still in registration, so probably better than most. This is 40 Act fund, so we really cannot say much. And really, my compliance department has said, don't say anything until we're effective. And we're thinking that will be fairly soon. But again, this is in the SEC's hands. The questions we've gotten seem to be de rigueur. So stay tuned.
On Wall Street, the question that everyone is debating is whether the Fed will keep raising rates or they will pause and change tack to lower them next year.
We think the latter. We're getting all kinds of signals that the economy is very weak. I know a lot of people are focusing on last week's employment gain in non-farm payroll, but if you look at household employment, which is a much broader based survey of employment, that has been flat to down for the last 4 months. If you look at claims, we've never seen a faster increase off the bottom than we've just seen. We're up about roughly 50% from the lows. Many people, I don't think, have taken a close look at that. And we're hearing one layoff after another. And we know the Challenger survey says that layoffs are up 55 to 60% year over year. And I think this is all related to inventories. We have massive inventory glut. And so I think that the last few hires, I think companies were really happy to get them because labor was in short supply for so long.
After the prints we've seen, Cathie believes that we're still anticipating a headline of 8.7% on Wednesday, CPI?
Yes, I still think that because the evidence is piling up. Now, the CPI and in some measure, the PPI, both of those are lagging indicators. The Fed is driving policy off of lagging indicators. If I look at Dr. Copper, the commodity with the PhD, it had been trading for a year in the $4 to $5 per pound range. It's now down to $3.50. It's had a decisive break. And if you look at how that's going to feed into the indexes, it'll feed in slowly, to be sure. But just month over month, copper is down roughly 20%, and year over year, it's down roughly 20%. Mm-hmm. So that's the activity side of things. If you look at the real inflation gauge out there, it's gold. Gold prices peaked in August of 2020, 2 years ago. And we've been in a trading range, to be sure. We're at the low end of that trading range now.
Right.
If the Fed continues to tighten, we believe the dollar will turn back up and these commodities will continue to fall.
Why not shift to cash instead of investing in a fund?
Yes, well, we believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same. Now, I think the differences are, we see an inverted yield curve, and that, of course, is also a warning sign. I think our point of view is that this is going to be severe inventory recession, but we didn't have the systemic excesses like we did pre-08-09 in the mortgage market. So it's an inventory recession here. And while most economists are saying, oh, okay, the inverted yield curve points to a recession maybe next year, we believe we'll be coming out of it next year. Now, I think the question is what's going on in China. I think some of the commodity price decline has to do with China unraveling in some sense from a cyclical point of view. I mean, they've got their foot on the brake in many ways. They're trying to let it off a little bit here and there. But I think that the real estate downturn in China is 30% of their economy, 75% of consumer savings. I think they're not going to be able to control it the way they thought they were. We are going to be 100% invested in innovation. That's who we are. This is what we're paid to do. This is what we say we are. And we think that innovation is going to be critical allocation in the years ahead as the world moves rapidly. And it tends to, innovation tends to gain traction during tough times. Innovation solves problems. We have so many problems right now. We've got the supply chain problems, which we're still hearing about. We've got energy and food prices up because of the war, really hurting consumer purchasing power. And so I think better, cheaper, faster, more productive, more efficient, more creative is going to win. That's what innovation is. We don't think that's truly disruptive innovation. No, we have not considered it. That is swaps-based product, so there's counterparty risk there. And so we have no intention of doing anything like that.
Does Cathie have any succession plan after her?
Yes, so I have very deep bench in terms of talent. We have just promoted within the last 6 months 2 of our senior analysts to become associate portfolio managers, and so they're working with me very closely. You know, when I started managing money, I continued to do research as well. I think it's very good discipline for us. And even today, I'm doing still a lot of research with our research analysts. Years now have been taught, or I've been teaching them how to do things the Ark way, because really we're not going to find talent or out there, seasoned talent, because really very few companies are doing what we do right now. The kind of top-down research that we're doing, the 5-year investment time horizon, the kind of bottom-up research as well. And as you know, we're starting to put our models out there because we think there are so many inefficiencies in research and investing when it comes to innovation. We've got Tesla, Zoom, and Roku now, with others to follow during the next few months.
What are the best and worst scenarios for Ark Invest during the next 5 years?
Well, in terms of returns, I have to be very careful in terms of, we can't promise anything. But if you're talking about the backdrop, if inflation were truly embedded in the system, 70s style, that would not, as the markets were adjusting or would be adjusting for that would not be a good time, because interest rates probably would go a lot. In fact, one of the really reassuring developments recently has been the drop in long-term interest rates. The 10-year Treasury yield back to closing in on 275. It has not been able to maintain anything above 3% for very long at all. So the bond market is basically saying, no, this is a very good time for innovation. However, if it reversed and went the other way, that would be bad. If our outlook for deflation is correct, technologically enabled innovations, that's good deflation. That's not a bad deflation. If those two are correct, that would be the best environment. But if you look at range and power, the combination of those, most other auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or to reach Tesla's combination. So that's very important from a performance point of view and a range point of view. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty. Tesla is now within the next year or so, is going to spend more on electric vehicles, if it is not already, than either one of those companies. So here were the behemoths where, 5 years ago, when most people were saying, Tesla doesn't even have shots to exist. It's going bankrupt. Now it is spewing out cash and spending as aggressively as it can to roll out new plans. And we think they'll announce another one before the end of the year.
Why did Cathie sell the coin? And how does she feel about stocks in the current environment?
So Coinbase, why did we sell some? On the day that the insider trading was announced. That's not why we sold it. Actually, it was Coinbase who surfaced or exposed what was going on there for the SEC. But the SEC did weigh in and say, we think that at least 9 securities, I think it was nine of the crypto assets on Coinbase's platform are securities. So you saw that we sold very little, but we did it, we were in a day where the markets were very volatile and Shopify was down 15%, a little bit of thesis risk increase in coin. So we swapped some. It was maybe 20 basis points, not a lot. In terms of GBTC, well, we started in 2015 when Bitcoin was at $250. So that gives you a sense of how low a cost base we have. And we've continued to hold it. We wouldn't, I don't think we could use BITO and MicroStrategy. We want the underlying Bitcoin.